No, 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 no.
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a wonderful day today. Now, Bitcoin, as you guys can see right here, we are still holding these levels, but we are still having some difficulty getting out of this area right here. In fact, you can see we kind of pulled down to where we were recently having this resistance. So Bitcoin really does need to break above this level or risk coming back down again. As you guys can see right here, we did put in this asymmetrical triangle twice, right? Both times we had the pump. Will this time hold? Well, nevertheless, you can see, I mean, you don't even have to draw a line. You can clearly see that we are putting in these higher lows. So maybe we do come down, and retest this area and just, extend this out to the upside and continue moving, right? That is a possibility, but I do want to talk about what is happening tomorrow because we do have a major event that could shift markets in a very dramatic way. And you know me, I don't really particularly like these moves right before a weekend, but it is possible that tomorrow we do see a bit of a volatile move. I will tell you why in just a bit. I also want to talk about why there are trillions of dollars literally waiting right now on the sidelines to enter crypto, but they are waiting for this one specific event to happen. And if it does, it could be massive for cryptocurrency. Also, we do have regulation now coming out in the EU. Now, is this something that the US and other countries are going to start to follow? And if we do get that regulation, could that be the green light for the institutions, right? That is something we need to discuss as well. And if you guys are wondering why I didn't make a video yesterday, it was actually crazy, guys. So there was an accident that happened at the bottom of my property. Literally, I saw it with my own eyes. A car hit another car making an illegal U-turn. This car hit my tree, flipped sideways, and literally slid on my driveway, all the way. I mean, it was crazy. I saw the whole thing. Luckily, everyone was all right. I think the one guy, he might have had a little bit of bruising. I'm sure he was sore, but ultimately everybody was safe. But it was absolutely crazy. So between, the police and the insurance claims and all this other stuff, I had a really crazy day. But luckily, no one was hurt. And also, nothing really crazy happened in the market. So today, we are going to talk about what is going on. So I love you guys. You're awesome. Thanks for sticking it out. I know these times are boring and uncertain, but I can guarantee you there's going to be some crazy times ahead. And tomorrow might just be that event that could kick it off. So make sure you watch to the end of the video today. It's not just TA. There's a lot of news and fundamentals at the end. We're going to go into all that. If that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And yeah, let's dive right into the chart. So as you guys can see right here, we obviously have had this pattern happen twice. And, if you had to sort of estimate where we're sort of having this rebound, you can kind of see there's this area of sort of very weak resistance support that keeps kind of flipping back and forth, right? You can kind of see right here. So we may come down and sort of retest, well, we've actually already retested it, to be totally honest with you, but essentially right around that $19,900 level, right? What we're trying to break through is 20,360 because that's where we keep having all of these fake outs where we can't see, this one didn't even actually get up to that level. And we've already had 3 separate candles on the 4-hour attempting to break above this level, right? If we come over here and have a look, why is this so significant? Why are markets stalling? Well, obviously because of the big event that's happening tomorrow, which I'll get into, but also the fact that we do have this downward sloping trend right here, right? Very important. We've been talking about this, and every single time we hit this, it's actually been an opportunity to short. And if you guys remember, right here was where we actually shorted the market. I don't know if you remember that. And we did have that consolidation. And then, down here, once we had this pattern, we longed it again, but we are hitting that resistance again, right? So that is the first thing that Bitcoin needs to break through. We need to break through this downward sloping resistance. Now, it would not be terrible, and I'm just throwing this out there, not saying it's going to happen, if we did get rejected on the short term and come down here and retest this extremely important pivotal level at around 19,500. This chart, it's more 19,457, but kind of changes whatever exchange you're using. But ultimately, we could come down, fake everyone out and say, that's it, we got rejected, we're coming all the way back down to 1,800. But what would actually happen is we'd bounce off this level and then finally break through that support. And you could see there are, in fact, a lot of areas where Bitcoin could bounce up to. The next area could, in fact, be right here around $21,742, right? So we do have to keep our eyes on that. it could get a little volatile. The thing that's interesting, though, is if we actually look at this going into the weekend, right? So we would actually have Saturday, Sunday, right? And then Monday would bring us to right here, which means we're basically at the very, very, very end of this. So if for some reason we don't have a big move tomorrow, the weekend could get a little crazy. But Monday, Tuesday, you're pushing it. That's it. We're going to have a new potential trend for Bitcoin. We're either going to start going upwards or maybe just continue to the downside, which I think is less likely because of what I'm going to be telling you in a minute. But as I said, this major downward sloping resistance is also coinciding with the shorter time frame resistance. And obviously, the more you layer these resistances on top of each other, the harder it is to break through, right? If you're building a house or a building and you have one roof, okay, maybe I could break through it. But if I build a roof on top of a roof on top of a roof on top of a roof, you know what I'm saying? Now it's going to be difficult to get through. And you could say the same thing for support as well. If you start to build support, it's going to be harder to fall through the floor, which is why actually, even though people don't like the fact that we are sitting down here, building these levels of support long term, not having crazy price movements, where Bitcoin just like pumps all the way up to 40,000 out of nowhere, which I know is what everybody wants to happen. But actually, if that was to happen, it wouldn't really be healthy for the markets. You want to build that base, which if you guys want like the craziest, most bullish long-term outlook, you want to talk about building a base, look at this from here to here, guys, this area right in here. Okay, look at how long Bitcoin spent between around $30,000 and $60,000. Look at all this time that we spent in this area, right? Once we do eventually, and we're going to break this level at some point, whether it's the end of the year, the beginning of next, or who knows, I'm not, a crystal ball reader, but I can tell you that once we break through this level and we break through this previous support, there is a very, 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 very good chance that Bitcoin will literally never, ever fall below 30,000 again because of all of this structure that's been built over the course of almost 2 years, right? And really, when you think about it, buying anything under 30,000, any Bitcoin that you're buying under this level right here, under 30,000, is literally a generational buying opportunity, which is why I know everybody wants to time the bottom. We all want to be the trader that's sitting all in cash and just absolutely snipes the bottom. But let's be honest, even the best of the best traders don't usually get the bottoms and they don't usually get the tops, right? Especially if you're investing in dollar cost averaging. So, getting back to this again, for those people that are looking to trade, be careful of, news events that come out. If we do break through this, we're going to have a little bit of resistance at around 20,730. But like I said, get that confirmation on the breakout, and that's an easy move up to about 21,740. So even if you played that move from the confirmation of the breakout, that's about a 7.86% move, right? So do the math. If you're doing it on, 3x, that's like 22 or 23% or something like that. It could be a good scalp opportunity. Make sure you guys get subscribed. And if you do want to learn how to trade these charts, bull markets, bear markets, whatever, make sure you guys check out the tutorial popping up above, and also take advantage of the over $16,000 in bonuses below this video in the pinned comment if you guys are interested in learning how to trade. And if you want to see something even more crazy, like how all these levels are just lining up. So this is the falling wedge pattern that we've been showing on the log chart. I've had this chart up for, I think, well over a month now, maybe even longer, and we are still somehow respecting this, right? Now, the thing that's a little bit scary is this formation right here, right? If you look at what this pattern is doing, the fact that we keep having this support here, but we keep putting in these lower levels, that's a descending triangle. Descending triangles are actually bearish patterns, okay? They are, right? They usually tend to break to the downside, which is not good for us, right? We don't want to do that. But the most important patterns, if you're a pattern trader, is the larger ones, right? The longer a pattern takes to put in, the more significant the pattern is, right? So looking at something basically that we started back here in June and seeing, this potential, descending triangle. Yes, it's possible that means we could dump down to some of these lower levels and, hit that 13.8K level. Of course it does. But what you have to realize is that the bigger pattern is this falling wedge pattern. And falling wedge patterns, I don't know the exact specific percentage, but it's somewhere around, and somebody correct me if I'm wrong, I know someone's going to write in the comment, it's somewhere between like 65 and 75% chance breakout to the upside, right? So the majority of these moves historically throughout, all charts throughout history have massive breakout moves to the upside. It's just a matter of when is that rally going to start? Well, what could it do? We could just bounce around and fake out here and continue all the way, maybe until March of next year. That would bore the hell out of investors. It would put in this giant mini bottom here, which could set us up back to this level to then put in that structure here, right? So it's all about building the foundation. It's all about building the levels. And if you want to see something even crazier, watch this. And I'm not going to change these lines at all. I'm just going to switch what we have here and switch it over to linear. Boom. Look at that. Look at that, guys. Did you see how that happens? Look at this. This is the log scale. This is the linear scale. Look at what we're also seeing. So the heart line becomes this trend line right here. Resistance, resistance, resistance. That's why we had this double resistance right here. Massive sell-off. And also we have the main trend on the linear all the way down here, which if we zoom in right here, we can see that is literally what we're attempting to break right now. So you could see the significance, you can see the confluence, you can see how everything is aligning right now. And if we do have that massive move to the upside, this could be a very good start to a potential bear market. We are in a bear market, but bear market rally, right? Lots of opportunities could be laying ahead for that. Now, talking about interesting price levels, Ki Young Ju pointed out that the Coinbase outflow on-chain weighted average price shows these average areas where you're seeing massive institutional buying. And what's very interesting is right now, we are in fact in that zone based on this metric. So according to this chart, this is historically the levels in which the smart money is looking to accumulate. Doesn't mean we couldn't go lower. It just means that now is that opportune moment according to this historical trend. Now, something that you can also look at, this is a little bit different. This is a little bit more potentially bearish, but from Glassnode, if they say if we assess volumes flowing in and out of exchanges by whale-sized entities, so not just Coinbase, that's just obviously one exchange, but if we look at all of them, so these are exchanges over 1,000 Bitcoin, we can estimate their cost basis, right? Because when you have Bitcoin leaving the exchange, it usually means they're looking to hodl. When you see it entering the exchange, it usually means they're looking to sell. So the average price of whale deposits withdrawals since January of 2017 is currently around $15.8 thousand. Now, that seems a little bit more bearish, right? And we'd have to go all the way down to 15,800 to sort of meet their level of these whale deposits. But do remember, if we come back here and, like I said, we have been saying the bottom is in. Could we be wrong? Of course we could be wrong, right? But so far, we've actually been right on this. But, anything could change. But this is why this level is significant if you want to just look at it completely unbiased. Because if we actually come back here and switch this to the weekly chart, right, you can actually see that we have this level right here, right? This is a very important weekly close where we had this candle right here. And if we zoom over and have a look, what did we do right here? When we started to have this rally, we actually retested it in November of 2020. Right? So that was that long-term confirmation of the move switching to the upside. So that's why, you could see if we did have the bearish outcome, if we did dump from these levels, everyone's saying we're going to go to, 10K. I would not say that that's what's going to happen. I would say that around that $16,100 level would kind of be where you'd be, looking to accumulate. And, close enough to the $15,800 level. So could you see that wick fall down? And then, we build a base around 16 and come back up? It's possible, right? It's very possible, guys. But as I said, as of right now, it doesn't seem like we're going to do that. So far, the bottom does appear that it's in, but time will tell, right? We'll know. As of right now, we're technically correct in saying that the bottom is in. You can't say we're wrong. As of right now, we are correct, but time could prove us wrong. So that, we can only go off of previous history. We can only go off of what we can see in the charts, right? But there is a lot of fundamentals happening out there. Before we get to it, I wanted to just give a shout out to Anthony Pompliano's channel. This is a clip from his interview that he had with David Mercer. He's over at LMAX, and he pretty much talks about how there are institutions right now, big ones, not the ones that are in right now. We're talking huge, trillions of dollars. Now think about that number, trillions of dollars, right? What is the market cap right now for all of crypto? I haven't even looked at it recently. What are we at? Like $1.5 trillion or what? I don't even know what it's at right now. But we're talking trillions of new fresh capital potentially coming in. And a lot of them are probably going to allocate to the higher assets like Bitcoin and Ethereum, right? And he says this is the one thing that pretty much is holding these guys back.
Do you see regulation still being a hurdle for a lot of these organizations?
It's just a fact that the biggest organizations across the globe need that regulatory determinism. They need to know the rules of the game so they can add to the value of the game. But what I'd say is right now, so get ready, everyone. They're readying themselves, right? They are acting as if there was regulation in terms of the preparation, the connectivity, understanding the product, coming up with the structures, right? I can name probably 6 of the largest banks in the world who, if and when they get the green for go sign, I think they can be active throughout all the markets in crypto within a month. They're readying themselves, but they do need those approvals, be it the CFTC, the SEC, or the Fed. I'm hopeful and I'm expectant that we will get there. But look, we're going to be impatient in crypto land. We're probably going to expect it this year. We're not going to see it this year. I'd like to think there'd be some sign of regulatory determinism in 2023. I think we'll be much, much closer. If I had to bet, then the floodgates to true institutionalization of crypto will be 2024. And the key that opens or unlocks those floodgates will be regulation that is understandable and is built on the key pillars that currently exist within traditional finance.
So you can see that although the libertarians are clearly against, regulation, which, I mean, sure, you don't really need it to be regulated to transact in it. You can renounce your citizenship. You can go to another country. You can transact in Bitcoin. That's the beauty of it. No one's stopping you from doing that, right? So as far as Bitcoin, the protocol, that there's nothing they can do about that. But as far as more institutions coming in, this bigger adoption, especially, everybody asking when Moon, right? When $200,000 Bitcoin? Well, those prices probably won't happen until those guys get the green light. It's just the sad reality of the situation, right? So why are we seeing a little bit of a stalling in the market right now? Well, you can see that, and this is crazy. The DXY actually did bounce right here off of the 110 area. When we were making our video actually 2 days ago, I said that would be the area. We were approaching it. We were only off by a little bit, a few cents, and boom, we did have that bounce off of it, right? So that is just something to, kind of pay attention to right now is that, is the DXY just, it's another fake out and DXY is going to go higher? Well, we know what happens when that happens, right? So that is something to keep our eyes on. You can see right here, we did have a nice bounce in the stocks. Stocks are chilling right here, right now. I think a lot of people are waiting for tomorrow's announcement. But the kind of interesting thing though, and usually when you see stocks, move 2 or 3%, you usually see Bitcoin move, 6 to 10 or 15%. We didn't see that. And the same thing when the stocks fell, we didn't see Bitcoin fall as hard. So should we be taking this as Bitcoin is starting to decouple, or should we be taking the approach that maybe right now there isn't that much interest in Bitcoin? I don't want to be the bearer of bad news. You could take it either way. We don't really know, but based on the clip that we just saw, we know that there's interest, but they are sitting on the sidelines right now, right? So why is tomorrow such an important day? Well, if you guys remember on Tuesday, we had data that showed that job openings had actually tumbled 1.1 million in August to about 10 million, right? Now, this was the smaller of the two reports. The important report is coming out tomorrow. So why is this good news? Well, it's not actually good news to hear this, right? And although I've been saying, from my geographical region where I'm located, we're not seeing this, but also I have not spoke to every single person, every single business owner, in my, region or in my state or in the whole country, right? I don't know. It could be different in other places, but you could see that there is the bigger report that's coming out tomorrow. So if we actually see that the job openings are starting to fall, bad news, right? But what that means is that unemployment could start going up. Once again, bad news. So you can see right here, they say in a stable economy, investors like to see steady growth from the job market and low unemployment. However, the Fed's aggressive interest rate hikes to combat inflation have disrupted the normal market mentality. That means the sooner that the economy buckles under the weight of higher interest rates, which have increased by 3% since the beginning of the year, the sooner the Fed is likely to pump the brakes on the rate hikes, right? So they said they're watching two things. They're watching inflation and they're watching, employment or unemployment, right? And if unemployment does start to get too high, then they are going to actually pump the brakes. And why, even though this isn't an unemployment report, but having less available jobs means that people who want to work can't work. So that inherently increases unemployment. It's a really twisted, backwards kind of situation that we're in right now, but that's what we're dealing with. So what are we looking for? Right here, they say, according to the FactSet, economists are expecting an increase of 250,000 jobs in September. While that still represents job market growth relative to population expansion, it would actually be the slowest month of job growth since December of 2020, as the labor markets had steadily clawed back the millions of jobs lost during the pandemic. Total employment only topped pre-pandemic levels last month, according to St. Louis Fed. So if we get a jobs report basically that comes in lower than what they're expecting, even though this is bad news for people looking for work, it's good news for investors and speculators and for what the Fed is going to do, because the Fed knows that they could send us into a recession. In fact, that's probably what they're gonna do, right? But once we get to that point, that's when we're gonna see the reversal, right? But this is all short-term speculation. This could cause a bear market rally, but it would not be good not long-term, but like medium-term. Like short-term, it would be good. Medium-term, it would be bad. Long-term, it would be good. You know what I mean? So if you can have that outlook to 2024, 2025, which I know feels like an eternity from this level, you're talking, getting this regulation, having this happen. And I do have to go on a bit of a rant right now. I didn't plan on this, but, the odds of living through something like this, like what we're living through right now, guys, and I'm going to talk about the EU tightening their crypto ban and all this stuff. But one of the things that you have to think about is you don't really see too many of these types of cycles in your lifetime, right? I mean, I don't know what the average person is living nowadays, but most people only maybe see about 4 of these types of cycles, maybe 3, depends on, the situation. And of course, in all circumstances, this is the end. It's never been this bad. This is the worst, right? That's what they always say. And what happens? Well, a couple years later, everything goes back to normal. Stocks pump, Bitcoin pumps, and we just carry on, right? So the fact that we're living through this right now, it may feel like a curse. It may feel like something that is just, why does this have to happen to me at this point in my life? Just not fair. But you have to understand that once this is done, and the fact that we're living through this is the opportunity to make that transformative generational wealth that you can pass on, from, to your children, to your children's children, right? Right now, we're living through that moment. We're living through those discounts, those opportunities, those very, very rare moments. Could it get worse? I don't know. But I can tell you this, Bitcoin at the discount that it's at right now, even the stock market at the discount that it's at right now, right? Even some of the houses are coming down, right? If you had some cash on the side, I'm not telling you to buy real estate. I'm not a real estate expert, but I do know that a lot of the houses in my area that were going for 800, now I'm seeing 650, 600, things like that, right? So these are the times for the opportunities. And speaking about what's happening right now, the EU is tightening crypto ban on Russia in fresh rounds of sanctions. I mean, good luck with that. If you're coming from centralized exchanges, sure. But if you're doing P2P, you're using a VPN or something like that, right? How does anybody even know? I mean, where is a Bitcoin wallet even truly stored, right? It's on the internet. It's on blockchain. It's not in America. It's not in France. It's on the blockchain, right? You can access it from anywhere as long as you have your private keys. So not sure how they're actually planning on enforcing this, but what they are, in fact, greenlighting is this MiCA or MiCA. I don't know how to pronounce it. It's an acronym, but it stands for the Markets in Crypto Assets Regulation that passed in the European Council, and this passed literally yesterday. The development is a significant step towards bringing a consistent legislative landscape to the continent that has been so far fragmented. So MiCA will eliminate the need for national implementation laws by introducing the first ever licensing regimen for crypto wallets and exchanges to operate across the 27 member countries of the EU. It also aims to establish reserve requirements on stable coins to fight tax evasion and money laundering, and additional law will also be instated on the funds, etc., etc. Lawmakers at the European Parliament will have to formally greenlight the text, following which it will be translated in over 20 languages, and it has to undergo an adaptation of 2 to 18 months. So it's expected that this may not even go into effect until 2024, right? So we could still have all of next year with none of this happening. But as we do start to have these regulations happen, this is where you could see this big $1 trillion inflow, right? So the way that I'm looking at it right now is, I know, looking 2 years out, it just seems so far away, given the circumstances right now. But I mean, there's only 365 days in a year, right? You can do that twice. And considering, the average person only really ever sees 3 to maybe 4 of these type of, super tightening and then super quantitative cycles, right, in their lifetime, this could be one of the best opportunities, right? Until the next one, which who knows, might not happen for another 20, 25, 30 years or something like that. So just simply getting through the next 2 years of this crap could literally set you, me, everybody, all of us up basically for our lives, So that's the way that I look at it. I'm not getting down right now. I'm getting excited. I don't want Bitcoin to fall, but I'll tell you what, if it does, I got a cash position. You know what I'm saying? Like I have buy orders down at those levels right now. I'm more than happy to scoop up at that level. So, yeah, and I just want to end on this random story. So, because you guys heard about the Kim Kardashian thing, it says the SEC enforcement staffers are complaining that Gary Gensler violated protocol by hyping up the Kim Kardashian settlement, appearing on CNBC within minutes of the case being announced. People with direct knowledge have told Fox Business, calling it a publicity stunt designed to burnish his rep to be named Treasury Secretary. They also say Gensler stealthily approached CNBC for his appearance and created a video on the settlement, an unusual move for chairs who usually allow staff to take credit for actions and pursue broader issues. And also, let's be honest, I mean, what is 1.2 million really for Kim Kardashian? I mean, for the average person, that's crazy. But for Kim, that's just a couple sales of makeup for the week, right? I mean, isn't she like making tons of, they're so rich, those people. But I just thought that was funny how people are like, wow, publicity stunt by Gary Gensler. So you can't trust anyone. You don't know why anyone's doing anything what they're doing, right? But at the end of the day, guys, look at this. Look at this, guys. We are on our 5th month of being supported right here on the 89 EMA. If you've been watching the channel, this is something we've been calling for. And the closer you get to this level, the better the opportunity. And, touching this level pretty much is like, not saying financial advice, take the risk on the long, but if you've longed anywhere down in this area, you've always made out pretty much on a massive price gain. So, the closer we get to around 18,285, the better opportunity it is to put in a long if you guys are looking to trade. And obviously, I do recommend that you do check out the tutorial popping up right here, right now. Get subscribed. Tomorrow's going to be a big day. I'll let you know everything. My name's K-Dub. This is Crypto Zombie. I love you. Until next time, stay crypto. And of course, peace out.